entered into a new year, I'm still making the ever so popular dividends received video. I just had to continue this fan favorite video series where I go over all of the great companies that I own that continue to pay me passive dividend income every single quarter. This gets me much closer to my financial freedom goals as it helps substitute the income that I make from my 9-to-5 job and gives us back control of our own time. My portfolio is now up to $77,000 after just 3 years of investing in the stock market. Something brand new though to these videos is now I'm also going to be sharing how much I make in options income every month as well. This is a relatively new strategy that I've only recently begun doing to earn even more income using the cash covered put strategy. And don't worry, if you're unfamiliar with what that is, in future videos I will continue to talk all about it and try to explain it. But there's no need for me to explain why you should hit that like button and subscribe to help out a small-time YouTuber with the algorithm. We're going to start off here with all of the options income that I earned in the month of January. So you can see I've actually earned $382 in options income. Like I mentioned, this is a relatively new skill that I just learned how to do, and I've just been practicing, and it's crazy how much money I can make. This is considerably more than I actually made in dividend income for the month. But the thing with options though is just because I made $382 this month, that doesn't necessarily mean that in January of 22 that I'm gonna somehow make more than $382. It's not like with dividends, where dividends are very consistent, predictable cash flow that's constantly compounding year after year. Options, you really have to put in that time to get the best premiums, take the calculated risk. There's certainly no guarantees when doing options that you're gonna somehow make more money the following month or even the next year. As the year progresses, I'm going to continue to add to this little chart here, and we can see how much I've been making, and then as we get into next year, I'll start to do year-over-year comparisons as well. So I'm sure you don't want to miss that journey, so be sure to keep checking in and see how we're doing here. The companies that I usually do cash covered puts on is either DraftKings or NEO. I like doing these two particular stocks because they don't require that much capital, but they pay pretty good premiums. Also, some good news here is that 3M just announced that they raised their dividend a whole penny. That's not even a whole 1%, but this actually marks the 62nd straight year that 3M has raised their dividend. As an investor, we should be excited about this because some years we're going to get these tough 1% increases, but then other years we're going to jump for joy when there's a 10% increase. You know, that still averages out to a still pretty good 5.5% average. Plus that's 1% more that we'll have in our retirement, and that gets us even closer to our FIRE goals. Before we look at our dividend payments, I just want to talk about some troubling behavior I've been seeing here on YouTube, and chances are if you clicked on this video that has to do with dividend investing, this probably doesn't apply to you, but I'm going to talk about it anyway. To start off with, I feel like people these days are just forgetting about all the investing fundamentals. They want to skip right over the building blocks of a diversified portfolio. They're skipping from get rich scheme to get rich scheme. It just seems like people are chasing with crypto, GameStop, AMC, anything that has to do with EV, renewable energy, SPACs. They're not looking at business fundamentals, and they certainly don't care if companies even make profits. And you know why they do it is because right now everybody's starting to look like a genius. It seems like you throw $100 into anything these days and it spits back $200 right back at you. But eventually this will start to slow down. Times will get tough. Companies will face financial hardships. Suddenly all of these slam dunks or home runs that people keep going for, those are going to start to disappear. If you think the stock market goes up really quick, you're going to be shocked how quickly it can fall when sentiment starts to slow down. I certainly don't think there's anything wrong with allocating part of your portfolio to speculative investments, growth stocks, disruptive technologies, and innovation, and of course giving the middle finger to Wall Street hedge funds. But are you actually analyzing the competition? Are you understanding your investments? Will you be bold and hold on to stocks when a correction inevitably happens? If there's anything I've learned in my time in the markets, it's that the people who follow the herd, they are the people that are most likely to get burnt. It's going to be a lot harder to find that extra value in the stock market if you're just going to be going from flashy stock to flashy stock, trying to get that instant gratification investment. Dividend investing is often that value. People don't like it because it takes a really long time to see those results. It's not instant gratification. If anything, it's a marathon. Results come in slowly, but once they start to come in, they really start to compound. as you're about to see when I go through these dividends for the month and the year-over-year progression. I can say with a high degree of certainty, when I retire, my core companies like Pepsi and J&J will be paying for my lifestyle. I'm not so sure you can say the same about that recent SPAC that just IPO'd that has absolutely no profits and actually has no timetable of when they will be producing profits. At the end of the day, I'm going to be counting my championships, or dividends in this case. I'm not going to be counting the amount of slam dunk investments I had. Now let's get into the reason why you actually clicked on this video, and let's go over all of the dividends I received in January of 2021. So I actually had 14 different companies pay me this month, and that starts off with Iron Mountain, company that I actually sold, so this will be the final time I receive a dividend from them. Only had one share, just kept it for the longest time, never added to it, but now it's finally out of my portfolio, and I think actually right when I sold it, the stock shot up. Wish I had held on to it for a few more days, but hey, got the last dividend from them and I can move on in life. So I don't own any physical real estate, but that doesn't stop me from getting dividends from Medical Properties Trust. This is a great hospital owning real estate investment trust that operates throughout the world, has a pretty high dividend yield, and actually has great capital appreciation that I see on the horizon. Moving on here, we have the great company that is PepsiCo paying me $7.16. Pepsi's stock price has been relatively flat for some time here now, so I'm hoping that it continue to go up, but hey, at the same time, we're still collecting these dividends, and that's what really matters. We also have Chubb Limited here. This is an insurance company, and they pay me $2.34 this month. This $14.25 dividend payment from QYLD was actually from the December payout. So even though it says January, they just actually got this one delayed a little bit. So there's another QYLD one in here, so we'll cover that when we get to it. But obviously I didn't count this toward my January income. Then we got Medtronic, great dividend aristocrat here, actually one of the more low-key ones, got paid $4.64. Glad to see that Medtronic's share price is finally recovering to what it was toward the pre-C19 days. Then we got, Reality Income, just kidding, it's Realty Income. They are a monthly payer, and this month they pay me $3.28, but just in the past couple of weeks I actually added a few more shares, so that is actually going to be increasing now to over $3.28, and then I also set up drip for them, so every month they're just going to constantly be buying into more shares of this great real estate investment trust. Then, speaking of REITs, we have another one that paid me in the month of January, and that is Store Capital. They paid me a whole $9. So, glad to see more and more places now opening up. This should be great news for Store, as more of their tenants will probably now have business, and then therefore it's going to be a chain reaction and be easier to pay their rent. Moving on here, we have, this is the thru QYLD payment for the month, and that's $16.47. So I'm sure at this point most of you know what QYLD is. It's a great covered call ETF. They actually pay monthly dividends, and the dividend yield is actually over 10%, and they've actually been consistently paying monthly dividends since about 2013, so that's 8 years ago now. Of course, you're not going to get much capital appreciation, but if you've been able to get basically a guaranteed 10% over the last 8 years, that's an 80% return. That's not too bad. This is just interest that Fidelity pays you, so nothing to see here. And then as we move on here, we have the monthly paying ETF in SBHD. This one, I only own a few shares of it, so it pays me 90 cents in total. And then we have NRZ, the company that famously used to pay you 50 cents per a share of their stock when their share price is only like $8. So that used to be a ridiculous dividend yield. They had to cut it during the C19, but it has been raising it back up. It's not quite yet at that 50 cent level, but it's definitely getting back up there, so that's definitely a promising sign. Wish I had bought more of them when they were like $3 when C19 first started, as even the share prices started to recover as well. I also got paid $7.80 from AT&T. This is one that have been going back and forth on and buying more shares, but for the time being I've just been adding more capital into growth stocks. So big dividend plays like AT&T, do want to add more into. Honestly, like the payback period, if you get like a 7% yield, it will take you just a little over a decade to actually get paid back that full investment and just continue to milk in those dividends. Because as long as AT&T is still in business for like the next 15 years, like there's a very good chance of that happening. Then we have the Old Reliable and General Mills. I've actually been eating their Reese's Puff cereal a lot more lately. Hey, that $2.04, that's almost enough to buy me some Reese's Puffs. Okay, JP Morgan Chase, they pay out 90 cents every single quarter, and I own 12 shares of them right now. So glad to see that the banks are doing a lot better. Looks like the Fed is loosening those restrictions on share buybacks and dividend increases, so that's always great for the biggest bank in America. Also got paid $3.77 from Verizon. So altogether for the month of January of 2021, I made $86.61. So that's a pretty good way to start off the year. Now let's look at how much I actually made in January of 2020, and we can really see the power of dividends and the compounding here, because in January of 2020, I only made $23.33. So that represents a 271% increase that I just got here in dividends. So this is what happens when you just keep buying great investments, great companies, not trying to chase yields, not trying to find the next meme stock, the next hot stock that's going to 10x by tomorrow. This is what happens when you really try to follow the fundamentals of investing. Now, if we wanted to take it one step further, in January of 2019, I actually made only $10.18. So year over year, this is a pretty big deal. So in the past 2 years, to go from $10 to $87 now, just about, that's definitely encouraging. It makes me really excited for the rest of the year. My goal is to average $150 per month in dividend payments. So 14 different companies, guys. Now what you're viewing on this chart here is the total dividend growth progression I've had in my investing journey. So you can see this very nice upward mobility. That's a very promising sign that it's on this upward track. So unlike options income, dividend income, you can predict kind of the cash flow for the future. I can say with a very high degree of certainty that January of 2022, I will for sure cross this $86 threshold once more. I can't say that with options, but since I try to invest in great companies, I know that they probably will raise their dividend, and I'll also be buying more shares of them. So that really shows the power of compounding, letting the passive income work for you, letting the stocks do their magic. And don't forget the most important part of this video, guys, and that is buy, stash, collect cash. And be sure to subscribe to the channel, and I will talk to you guys next time.